Good evening, Alex Cole. Thursday night, March 4th, a little after 10 p.m. How are you doing, my friend?
Doing well, doing well. Good
Excellent.
week.
Yeah,
Volatile week, up and down.
volatile week.
Good
That's
for some, bad for others.
it's like going on the roller coasters after eating the funnel cake. Investors have been spoiled for a while now, and this might be causing a little nausea for some PMs who are new to the game. But that's why we look at go no go charts. That's why we find consistent, solid market trends and try to help our subscribers and investors stay on the right side of those trends. So let's review the Flight Path newsletter that went out Monday morning before these wild and crazy markets opened, before the tilt-a-whirl started spinning. Starting
Yep.
with the asset class heat map, just comparing across the major global asset classes. What stands out to you on this chart, Alex?
I think the obvious change is the amber bar that's appeared on the equity map.
Mm-hmm,
So when we kicked off the week, the trend was still in place. We were back in that trend channel. We've talked about that chart a number of times, but
mm-hmm,
today was not the best, and we rallied a bit into the close, but we saw price move low enough to actually cause the go no go trend to paint an amber bar and fall out of the go trend. So we see that in that first panel, which is equities, that amber bar coming at the end of the long go run.
mm-hmm,
Treasuries still very much a no go. Commodities are still in trend. We'll talk
mm-hmm.
about that later on. The dollar's been battling to get back into some sort of go trend, and obviously that was helped by, dollar will be stronger when equities fall typically.
Mm-hmm.
And then the cryptocurrencies, Bitcoin has had a rougher 2 weeks, but is
Mm-hmm.
still trading, and today's rallied quite strongly again. Um,
Yes.
so the themes are almost still the same. We're just seeing that
Mm-hmm.
little cause of concern in the equity markets.
Mm-hmm. It's still a risk on indication where we're seeing pretty strong performance from commodities, from equities, and from cryptocurrencies. Let's take a look at that SPX or SPY chart. We just wrapped up the month of February. We've got a fresh monthly bar. Let's take it out to the long term. I know everybody's hyper focused on their returns just for this week, but man, if you take a step back and you look at the long-term perspective, that amber bar towards the right-hand side of the chart, that was March 2020. It was 1 year ago where we saw the massive and unprecedented speed to bear market territory, 37% sell-off, and then the equally impressive and shocking move back into all-time new highs before the end of 2020. And so when you think about how powerful that trend is coming off the lows of last year, you have a little bit of context. These whipsaws, these corrections that we're seeing both last week and this week indicate that the market has some volatility, which is actually a great environment for separating the wheat from chaff, as they say,
Yeah.
looking for those outsized returns by being on the right side of the trend.
Yeah. From a long-term perspective, this is really interesting because that amber bar, typically it's very unusual for an amber bar, especially one that large, to be not followed by some no-go bars. So
Mm-hmm.
like you said, the speed of that drop and the speed of the recovery has been quite incredible. And you can see that we are in a very strong long-term go trend. And
Mm-hmm.
even on some of there's always the things that people are talking about. And like you said, you've got to try to remember what you really want to look at aren't necessarily what everybody's talking about.
Mm-hmm.
And even people have been really discussing Cathie Wood and
Mm-hmm.
investments and the fact that is it all over because her fund is down 20%, but you remember how much it's up since last
Exactly.
year.
Yeah.
You know, surprisingly to a lot of people, weeks like this one do happen. You know.
Mm-hmm. Markets do go down as well. Well, let's take a switch off of the
Yeah.
just the SPX. Let's take a look deeper into the equity space at all of the sectors. And so if you pull up a go no go rel map, the relative strength ratios of each sector of the S&P index, that's a great indication. There's a lot of information on this chart to help investors find real outperformance. And so just to explain quickly, we're looking at each panel is going to be one of the sectors of the S&P 500. Top XLB is going to be our builders, the materials sector. And you see this week that moved from pink to amber and into a go trend, a fresh go trend for the materials sector, even as the S&P index as a whole contracted and sold off today, dropping out of that go trend in the amber bar. And so what we're looking at here, what we're looking for is the leaders of the S&P. What sectors are the greatest opportunities? What's trending the strongest relative to the index as a whole? And the Fidelity Investment Team, the technical research group up in Boston, they work with some of the best institutional PMs in the world. And while none of this is easy, it is rather simple. If you want to beat your benchmark, you got to own the stocks that are beating the benchmark. And one place to start is with a GONoGO rel map, looking for those sectors that are outperforming the index as a whole. Obviously, Alex, we've been writing about and talking about XLE, the energy space, and the financials outperforming for a while. But on Monday, what was really interesting, kind of what this material sector is showing us here at the end of this week, was the industrial sector, XLI.
Yeah.
So let's jump over to the XLI chart and take a look specifically at what the price action is telling us for the industrials sector. Wow, look at that. Comparing
yeah, I mean, it was a bad day today, but generally speaking, the thing that jumps out to me is that we haven't had a sustained rolling over the last couple of weeks in the industrial sector. We've had actually a slightly higher high yesterday, and then today everything went down. But if you compare that, if you remember what that looks like, and then you look quickly back at the S&P, you can see this 2-week or even more rollover in price, which has now ended up with an amber bar. We don't have that on XLI yet. We have a really sort of a sideways move and a bad day today, but we also can look to the oscillator panel and see that we're at the zero line. If you noticed on that S&P chart, we were below zero, and we've been turned away from zero from below. So a very different picture here. Industrials relatively still outperforming.
And the cause for concern in the S&P is that the trend indication, the conditions have far more deterioration than what we're seeing in these leading sectors. So for all regimes, for all time periods, there will be securities that are trending higher, and you just have to make sure that you're positioned correctly. Obviously, the moves this year, the rotation has been swift. We've gone from growth to value, and in an incredible kind of whipsaw, where we saw a lot of those high growth tech names really lead throughout 2020 as everybody was locked down in the pandemic. And now we're seeing the markets price in an expectation for return to the industrial economy.
It's really in line with what we've been talking about. This hope for a rebounding economy in 2021, fueled by optimism of around the vaccine rollout and a return to some sort of economy that is not just fueled by mega tech stocks. And we've been seeing that rotation. The leadership sectors now are energy, financials, industrials, and materials that we noticed just now on that chart. So definitely in line with the commentary of how the markets are rotating.
That's very well said, Alex. So thinking about the industrial sector, we're talking about railroads, manufacturing conglomerates, some aerospace and defense. This sector is made up of all of the companies that are most sensitive to economic recession, and certainly 2020 we stopped a lot of these folks from going to work. So now the stock market is pricing in the expectation that we'll be returning in 2021. Let's look at a couple of charts for individual securities within the XLI. Why don't we pull up my favorite, Old Dominion Freight Lines. not the sexiest stock. You don't see a lot of people on, Facebook, Snapchat, Twitter
No,
talking about their Old Dominion
certainly
Freight
don't.
Line. No. But look at that chart compared to
Yeah,
what we were seeing this week for
yeah,
the index as a whole.
yeah.
What jumps out of this for you, Alex?
Yeah, much like we were talking about with XLI, a higher high yesterday. Today, not a great day, but really we're not far away from where we were at the beginning of the week. Actually, if you look back five bars, we're
Hmm.
not down significantly like the S&P is on the week. We're not down, 10% like some of these tech names. We're pretty much where we were at the beginning of the week. And if you have a week like this and you're flat in your portfolio, um, you've done pretty well and you've outperformed. And so the
Hmm.
trend is in place. It's been identified back here, this new go in early February, and now largely supported by the zero line on the oscillator. And momentum isn't even at zero right now, which says that at least one of the inputs to the GONoGO oscillator is actually showing some overbought signal. So that's a healthy bit of momentum still in ODFL. So a totally different chart.
Brilliant. We looked at this across multiple time frames for our subscribers on Monday morning before the markets opened. And certainly what really stands out for something like railroads is that these are in long-term go trends. There's confirmation that comes from this. And why don't we move off of the railroads and let's take a
Yep.
look at Huntington Ingalls Industries, just for another example. This is a shipbuilder, so they have government contracts with the Defense Department, but they also build ships for general industry. And look at that for the week. What a great setup, Alex.
Yeah, and even slight gains for the week, right?
Hmm.
This is Monday, and we're actually slightly higher now.
Hmm.
And this we've talked about this a lot of times in different charts, different weeks, different daily ideas, different newsletters. But we
Hmm.
like this setup. You just hinted at it, but a go has been identified. We've seen a sharp rally. Some people have taken profits. Some money's come off. We've seen a cooling that's been depicted by the aqua bars, and we
Hmm.
see the oscillator fall to zero. We love to see this. And if the oscillator can rebound and rally into positive territory, then that's signaling to us that momentum has come back in the direction of the trend. So if that
Hmm.
was to happen, we'd get a low risk entry. We'd get that green circle that we love to see underneath price. And
Hmm.
so this is a and the beauty of this is that if we don't see that, then that's not the trade we thought we were going to see. There's no,
Right.
it's very objective. We're
Hmm.
losing for a rally into positive territory off the oscillator, which will give us a low risk entry under price. If that
Correct.
happens, it happens. If it doesn't, if the oscillator breaks into negative territory, then the situation isn't the same as we thought it might be. But overall, slightly up on the week and waiting for a re-entry signal, also much different from what we're seeing in S&P.
Alex, you made a really important point there, which is well-defined risk parameters. George Soros is famous for having said, it's not how much you make, it's how much you don't lose. And so
Yeah,
when we see a chart like this with a very clear setup, when that oscillator makes its decision, if we find support at zero, rally into positive territory, we know we want to be positioned to take that trade, to get in on this go trend. But we also know very clearly where our risk levels are at. And if that trade turns against us, we want to cut our losses short. And the ability to do that by having very well-defined risk based on the low of the prior bars. So
yeah, yeah,
let's jump ahead. We've talked a little bit about the equity space. We know that the markets are anticipating this return to the industrial economy. So commodities, that is the driver. When the industrial economy comes back online, we're going to need raw materials. We've seen that energy sector in the equity space really outperform. So let's look at you've got on screen the commodities heat map. We're looking at all sectors of the USCI, and look at that. If you own anything except gold, you're a hero. Gold is the only purple panel on this whole chart.
yeah.
Uh,
Keep your jewelry. Don't sell your jewelry.
Don't sell your jewelry right now. Don't go buying ingots with any extra income you've got.
Yeah,
But the
but look at that.
commodities, yeah.
Everything, and again, that's what we've been talking about, or not us, the market commentary
Hmm.
about potential inflationary pressure and super cycle in commodities. You love to tell me all about this, or for a few weeks now. This is what we're seeing, and on this chart,
Yep.
every commodity is in a go trend, like you
And
said, except
not to get too macroeconomic on everybody, but when we're seeing this kind of move in commodities, and we're seeing that no-go trend in government treasuries, this is a very bullish indication on what the economy is going to be doing, and therefore we should see that expressed in the equity markets as well. To me, the deterioration in the SPY this week, some of those sell-offs, they're healthy. Market is digesting these new gains, and I know it feels like you're on the tilt-a-whirl after too many funnel cakes, but this is a very good sign. So let's
yeah,
thinking about commodities. Okay, we can own any commodity except gold, and we're doing well. But what if we want to do really well, Alex? What if we want to beat the benchmark, outperform the masses, and really find the best gains? If we turn
yeah,
this heat map into a relative strength map, what does that look like on the daily?
totally different. We got to put the daily on here, and we'll see that it's totally different. And in fact, oil is where you want to be.
Yep, brilliant.
Oil is driving the commodity markets, and even though they're all in go trends, the relative trend or the outperformance is in oil, clearly.
So just to explain to our viewers real quick, these panels are looking at the exact same sectors of the USCI, but instead of on an absolute basis, so they were in go trends, they're trending higher. Instead of being on an absolute basis, we're looking at them on a relative basis. So each sector is compared to the USCI index. And when you look at it this way, you can tell where leadership and laggardship lie. Obviously, gold still strong dark purple on both an absolute and relative basis, underperforming. Do not own gold right now. We're seeing relative underperformance from silver as well. But once you get into energy, liquid natural gas, oil, and then you get into the soft commodities, we saw all of those strong go trends on the absolute basis, but compared to oil on a relative basis, these are not outperforming the index, and it's oil that is driving the USCI higher the fastest. That's your leading sector.
Yeah,
So if we jump off this rel map and we look at a couple of oil companies, one of the things we like to do for subscribers is try to understand these trends. We know oil is outperforming, and if we're going to look for individual securities in that oil space, we want to look at other trends as well, like that trend, that rotation from growth to value. Want to find some strong value names, maybe smaller cap names. So Alex, if you pull up WLL, Whiting Petroleum Corporation, let's take a look at how that has performed this week. Brilliant. Again,
yeah,
this went out to subscribers Monday morning, and look how that's performed. We've actually
yeah,
found some gains in Whiting
yeah,
Petroleum this week.
yeah. And again, another really nice a nice setup. You've got your go trend identified, strong rally, correction sideways, perhaps even more bullish, right? When the correction is not even really a correction, it's more of a consolidation sideways, which has caused the oscillator to drop to zero. And it's already tried to rally. We got that low risk entry here, and again now it's at zero. So a nice
Retesting for support.
yeah, yeah.
Mm-hmm. Brilliant. Let's take a look at one last chart before we let everybody go tonight. It's 10:30 here in New York. Headwater Exploration. This is HWX. It's a Canadian exploration company, both in oil and natural gas. And look at that. Oscillator's nowhere near the zero line. That is a healthy trend, my friend.
Yeah, we've loved this one. That's how you want your trends to look. If you could pick them, that's how you want them to look,
Yes.
strong runs, sideways or slightly counter trend corrections, new leg up, slight counter trend correction, new leg up. And in this case, like you said, not even at zero. There's definitely some momentum still here. And we, again, I believe this was, let's see, yeah, I mean, the close of Monday, 376, and close of today, 389. So
Even a little
there's
small gains.
some small gains and some places to be that were a little safer based on where the outperformance is on a sector and asset and commodity basis.
Yeah, that's very well said, Alex. We take a top-down approach, look across all asset classes, drill into the sectors, see what's outperforming on both an absolute and relative basis, and then find these names that are picking up on multiple themes like smaller cap value names in the oil space, and that's a very healthy uptrend. Alex,
and don't forget multi-time frames, right? You talked about that a lot in the
newsletter,
in the flight path this week. If you look at a weekly on HWX, you know, we see the go trend has been in place really since December 2019. So then you go back to that daily chart and you can be looking for any one of these go signals as entries or opportunities to size into positions. So yeah, keep in mind the bigger picture. We're always talking about that, and there are some opportunities to be had.
Absolutely. Yeah, Charles Dow talked about these three trends: primary, secondary, and tertiary. And so it's really helpful, and we encourage all of our subscribers, when you get launch conditions at the end of each week, take some time over the weekend, grab a coffee, print out your chart pack, just get a sense for what the long-term trends are, so you're not lost in the noise of financial news media and the headlines that rock us every day in a volatile market like this. So, Alex, thank you very much for walking us through flight path from GONoGO charts, March 4th, 2021. I want to say thanks once again, and looking forward to seeing you soon.
Yes, sir. See you in the morning.
Cheers.